It really, what drives the ESG train is climate change. And climate change has been catastrophized to such a level that people are now convinced that corporations and government and individuals, everybody on the planet has to work together.
Before we get into this important interview with Marlo Oaks on ESG versus capitalism, I want to bring up Cardio Miracle. Cardio Miracle has been a sponsor of this show for over a year. I hope there are many years in the future that we are able to work together. It is a fantastic product. I use it every single day, 3 times a day, and I have measurable results. Just went in for a blood test again, measurable results on a number of those line items that you may look at when you get a blood test as well. Not to mention blood pressure and an incredible recent cardiologist office visit, the best I've ever had. He said that my arteries look fantastic. I've never had a doctor say that to me. So Cardio Miracle, go to cwicmedia.com. That's CWICmedia.com. Scroll down to the bottom of the homepage and click on the ad there for Cardio Miracle. There's a quick video that you can see with me in it talking about the product and how I use it. Cwicmedia.com. Go check it out. Here we go. All right, welcome to Cwic Show. My name is Greg Mattson, and I am your host. On this episode, we bring back Marlo Oaks, Utah State Treasurer, to talk about ESG. Marlo, you've become more and more of a warning voice on ESG these days. You recently were invited to speak to the Ways and Means Committee at Congress, I think earlier this month. Well, first of all, welcome to the show.
Thank you. Thanks for having me.
How is it that you were invited to speak to Congress?
So I guess somebody on the House Ways and Means staff had reached out to an organization and asked who they should invite to come speak. I think they wanted a state treasurer, and so my name was floated, and they reached out.
Okay, all right. Well, we've talked about this before a couple of times. ESG. I think that this is something I want to cover even more on the podcast. I'm drawing many of the questions that I'm going over here from your address to the Congress and some of the quotes that you gave them. I'm going to ask you this first, right? And I'm going to assume that most people understand already what ESG is. But how does ESG hijack corporate governance to advance an ideological objective?
So there are a few ways. One is asset managers with trillions of dollars, and it's other people's money under management. They're including, that includes non-ESG funds. So that's something that a lot of people don't understand, is that the agenda is being pushed by funds that are not labeled sustainable or ESG. Really, managers are trying to use all assets under management. And so they use that money, and then they go into companies and engage with those companies and tell them what they expect them to do. And this is outside of a proxy vote, which is sort of the annual shareholder meeting where issues are voted on by shareholders. This engagement is happening with the largest investment managers that go in as the largest owners of the company and saying, here's what we expect you to do. So they might go into, for example, ExxonMobil and say, hey, we expect you to reduce your greenhouse gas emissions. You need to put together a plan to be net zero by 2050, and by the way, cut oil production by 20%. So that's one way that they're hijacking.
Who is going in and asking them to do this?
This is the investment managers. So, the BlackRocks, the State Streets of the world, the Vanguards, a lot of the assets have been consolidated at passive investment managers, those that are just running index funds. And so they use that ownership and they become active owners on the governance side. So they go in and they tell these companies what they expect them to do.
Now, are they owners only because they run the funds, or are they owners in the sense that they have voting rights as well?
So it's both. So they essentially are, a lot of the assets in the United States that are in retirement portfolios, whether it's a 401k or a traditional defined benefit pension plan, are index or passive, certainly on the equity side, and that's where you get the ownership. And so by virtue of owning the shares of the company, they exercise the rights as an owner, even though the real owner is you and I in our retirement, but
Our money.
we have effectively hired an agent for us, and they are then exercising the power of that ownership to push an agenda. And so they do that both through the proxy voting, where they do have a right to exercise, voting rights essentially on issues that come before a corporate board and before the shareholders. Essentially, they'll vote the shares, and they're supposed to vote them using a fiduciary standard, which means voting them in the best interest and financial interest of the owners. And so what's in the best interest of shareholders. But the most dangerous part of this whole situation is the engagement that happens outside of the proxy voting. And so one thing that was noted by the press this last year was that BlackRock only supported 7% of ESG proposals. But if you adjust for the engagement that they had with companies and the amount of success that they had in getting companies to adopt the ESG issues that BlackRock wanted them to adopt, if you adjust that number, it was more like 53% of voting in favor, essentially, because they had already gotten the company to agree to push a particular ESG item outside of the proxy vote.
So here's something I'm trying to understand. I've looked into ESG quite a bit over the last several years, and why? Because this is something that is growing. There's more and more assets under management that are under this ESG umbrella. As you say, the investment companies or managers are taking this on. They're the ones directing, oftentimes, an ESG agenda. This is completely against letting the markets work. I mean, this is when you go and you invest in the stock market, you are doing that with the understanding that you're trying to make a wise investment in the marketplace, and that your assets are going to grow over time, and that there's no other additional agenda that is going to be influencing this other than the capital markets, other than capitalism, right? And hopefully you're making and this is for your retirement. That's where most of these funds come from. They're in people's retirement accounts. Why in the world do investment management companies and others want to change that?
That's a great question. I believe that the ultimate agenda, what drives the ESG train is climate change. And climate change has been catastrophized to such a level that people are now convinced that corporations and government and individuals, everybody on the planet has to work together to address climate change because we face an existential threat. Well, James Madison said, crisis is the rallying cry of the tyrant. And if you look at some of the quotes by people who are pushing this agenda, the real agenda behind climate change is something different. And so, for example, in 2015, Christiana Figueres, who was the head of the IPCC at the UN, which is their climate change body, she was responsible for the Paris Climate Accord later that year. So earlier in 2015, she said, this is the first time in the history of the world that we have intentionally tried to change the economic system that's been in place in the world for the last 150 years. In 2019, AOC.
Just real quick. So that's capitalism.
Yes.
That's capital, and that is directly tied to democracy.
Correct. AOC's chief of staff said the Green New Deal originally wasn't about climate. It was how do you change the economic system? The UN commissioned a report in 2018, and the headline that came out of that is, we cannot fight climate change with capitalism. And so that is the real agenda, is the destruction of our economic freedoms. And if you look at ESG and understand what ESG is, which is essentially coercive capitalism, it cannot coexist in our economic system, our free market system, because there is an agenda that goes beyond the investment agenda that is typically is what investors invest for, and that is to make money. As soon as you introduce another agenda, for example, climate change and addressing climate or addressing social issues, whatever it is, when you introduce that agenda, you now have corrupted the capital markets, because you have the dual mandate that harms the fiduciary standard in this country. And when you introduce an agenda and you say all actors have to adopt this, you no longer have a marketplace, because the only way a market works is to have alternative views of the future, which means there's not an agenda other than to make money. So we're literally seeing the push to destroy our economic system, and that's borne out by what some of these folks have said themselves.
So you've already mentioned some of the players here, the investment managers. Who is really ultimately then, is there a group or an institution, an organization, who is ultimately pushing the proliferation of ESG?
Well, so if you look at globalism in general, in order to get global buy-in, I think of it as a three-legged stool. So one of the legs is government. And to get government on board, that's why you have the UN Sustainable Development Goals. To get corporations on board, that's ESG, and that's the World Economic Forum. And then to get individuals to buy in, the UN and World Economic Forum and other globalist interests recognize that people listen to their religious leaders. And so religious organizations are now pushing climate change and trying to address climate change. And so religious organizations have been infiltrated. On the corporate side, again, it's the kind of World Economic Forum taking the lead, but it's very closely tied to the UN Sustainable Development Goals. And really the folks who are pushing this, you have to look at NGOs, you need to look at nonprofit organizations, like Rockefellers and other kind of these globalist foundations that have long been interested in global governance.
And coming out from there, you've got the investment. Why does it help I'm just trying to think here, because it seems to me that if we're not there yet, we're pretty close to a point where the agenda for even the investment managers is more important than the idea of actual capitalism and making money. In other words, why would they say, okay, we're going to go along with the World Economic Forum, or we're going to go along with these other initiatives, if it's going to hurt them financially?
Yeah, that's one of the strange things here. And you have to look one step above them, which is the asset owners. The asset owners are the large pension systems, the sovereign wealth funds. 19 of the 20 largest institutional investors in the world are government-sponsored entities, whether it's a pension system or a sovereign wealth fund. And they go out and they hire the investment manager. And so the investment manager has clients coming to them saying, we want you to invest your assets with this ESG mandate, but not just our assets, all of your assets under management. And they've done that, and that's what they're doing. They're going into investment managers and putting pressure on them. And investment managers, that's how they make money, is to manage assets. And so when you have your largest clients coming to you and demanding this, it's difficult to stand up to that. And there is a virtue signaling component here where investment managers say, well, this could be good for business. If we adopt this and show that we're being responsible stewards and, trying to do the right thing for the climate, and it shows the extent to which this agenda has been has infiltrated or has been propagandized. I'm not sure what the right word is, but it is so ubiquitous, and so many people believe that climate it represents an existential threat, that they want to see business adopting this. They want everybody to go along with this, and I think that's what makes this so dangerous. When you adopt a crisis narrative, there's a lot that you can do to take away freedom.
In 2022, you had mentioned that the Department of Labor had loosened things up a bit. What happened then just last year?
Yeah, so the Department of Labor, is in charge of ERISA, the law that governs retirement systems, kind of in the private sector, and so they allowed a ESG fund to be a default option in a retirement plan. And why that's important is that, when people go start work at a company, they sign up for their retirement plan. And a lot of times the investment options, it's just very complicated, and people don't really feel comfortable, making those kinds of decisions. So they often will, go into what's called the default option, which is essentially the option, if you haven't chosen where you want your money to go, that's where the money will go. And so it's not like an active choice that you're making. And so then you're seeing essentially the politicization of the retirement system through that, just that one rule alone from the Department of Labor.
One thing I think about when I look at bad policies, bad ideas, bad ideologies, is they almost always act like a virus. And what that means is they have to have a healthy host. And so they go after the money that's already produced through capitalism or is being produced through capitalism. They go after the money sitting in retirement funds that is there only because of our system and what we've created, and public companies and the ability to trade and invest. And then they bring this in, which is supposed to is going to hamper this greatly. But it acts that way, right? It comes in, it says, look, we're going to use your body or your system against you to accomplish our goals.
Yeah, but of course they make it sound wonderful, and and like everybody wants this and everybody needs to do this. There's sort of this veneer to it. And a lot of the story was that you'll get better returns using this methodology, and of course that has not played out. But they really try to sell it.
Actually show the opposite.
Exactly, that's exactly right. But the messaging is always, look at how wonderful this is.
Yeah. They're also stating oftentimes that the ESG model gives you additional information, right? In other words, they're opening up information, which they're really saying is, here are mostly the climate black eyes of the company, so to speak. And they're going to give you additional information about what you're investing in. Is that misleading?
Yes. Think about financial services companies, and they're really the target because they're the foundation of our capitalist system. They're the one that's allocating capital and making sure that companies have the money that they need. And so banks and insurance companies, they are always looking at risks, whatever they might be. Environmental risks, right? A property and casualty company. I used to work at a property and casualty company. They had to underwrite to environmental issues, tornado and hurricane risk and all these different risks, right? And ESG comes along and they act as if nobody had been doing this before, right? And these are new risks that we have to talk about. No, the reality is that companies have always had to disclose financially material risks, and they weren't called ESG risks in the past, but now some of them have been grouped under ESG risk. And so what I've always said is that if there's a financially material risk, then a company is already disclosing that. And if not, then it shouldn't be required of a company to disclose. The problem is once you say, oh, we have to disclose all this ESG information, you're really disclosing information that isn't necessarily useful to an investor, but it can be very useful to activists who want to push companies in certain directions and force policy on companies. And that's what we're seeing.
You had mentioned something in your address to Congress. You said something about guns. This is something I hadn't heard before. Is that part of ESG? Whether or not there is, I don't know if it's. Were you speaking about gun companies? Were you speaking about? I heard you mention something about guns.
I think it was basically targeting out of favor industries. So, we have an example here in the state of Utah, a state senator, and these are part-time legislators, right? So they have their own jobs. He had sold equipment or something to a coal company, and his insurance refused to quote or to re-up his insurance because he had done business with a coal company. Now you could say, well, you're doing business with a gun company, you're doing business with, whatever it is. You can see how capitalism can be twisted to force behavior because people need money, companies need money, right? That's the way our system works, and I think of it as analogous to the blindfold in our legal system, where justice is blind. Well, business is supposed to be blind. You're supposed to be making economic decisions based on economics, not politics. And so ESG really tries to take the blindfold off of economics and add an element of politics, and it will destroy our economic freedoms.
Yeah, I actually know people that have had their bank accounts frozen. I mean, not their money taken, but hey, you can't do business here anymore with us.
Right.
Because
of the whole debanking.
Because of political transactions. Yeah, it's very concerning, very, very concerning.
Oh yeah, no, and in fact, I've noticed an increase in that kind of activity, and I don't know if the heads of banks are aware of it, or if this is just an element within the bank that under somebody else, kind of buried in the bank, and they're doing it. I don't know, but it's a very concerning part. I group it in with ESG because it's essentially politicizing our economic system.
In the case of the people that I know, it was the Department of Justice came to the bank.
Oh my.
Yeah. And anyway, it's very, very odd and very, very concerning. There's a new asset class that's come out in the last few years called natural asset companies. Can you go over that a little bit? They seem almost like the ESG class of assets.
Yeah, this is really a serious problem. Essentially, the New York Stock Exchange went to the Securities and Exchange Commission, the SEC, on September 27th, so just a couple of months ago. And they said, we need you to provide a rule that will allow us to list companies whose purpose is not to make money, it is to provide ecological services. And what that means is that these companies would be formed on the New York Stock Exchange or listed on the New York Stock Exchange. They would raise capital from investors around the world, and then they would go out and buy land in the United States and basically lock it up from economic activity. And so you could take large amounts of land, whether it's public or private, and lock it away so that you really eliminate human impact. And that seems to be the driving issue is that people want to reduce human impact on the environment. And the best way to do that is to lock humans away from economic activity, such as grazing and mineral extraction, and that kind of those kinds of activities are very important economically, but they're also a major part of rural America. And folks in the city, you might ask them where eggs come from, and they'll say a carton. Right, but it's coming from rural America, and rural America is where we get fed, and our oil and gas is coming from there, and it's a key part of our economic activity. If we allow natural asset companies to begin trading in the United States, you could see massive amounts of land locked up and essentially taken away from human activity, which would drive up the price of agricultural goods, drive up the price of minerals, including oil and gasoline, and drive people out of rural communities into the cities. I think that's also part of the agenda here is if you have people confined into smaller spaces, they tend to travel less, and you can control them better. And so it really is troubling on a lot of different levels.
Again, I ask again, is there an economic benefit for someone on this?
Yeah, so you could see carbon credits. You could actually, I think, make quite good money on potentially monetizing. People wanting to. If people want to reduce their carbon footprint, they buy into a natural asset company that is producing ecological services and taking carbon out of the air because they own a certain amount of forest, and so they're able to claim those carbon credits or tax credits. Something there's going to be economic ways to benefit from that, what I think as artificially benefiting. But those could be very big markets potentially, particularly with large sovereign wealth funds that may be very interested in that. China, Russia, Saudi Arabia. What better way to cripple the United States than to buy into one of these and have our natural resources locked up without a fight.
Let me go back to the production on this, though, the capital production. I mean, if you are showing, let's a couple things here. Number one, let's say you go out and you buy 10,000 acres instead of buying 100 or whatever it is that you're going to use for a farm or for a somewhere that produces eggs, for example. Mm-hmm. And so maybe your carbon footprint then is reduced because of the amount of land, and it's now a percentage. Is that kind of what you're saying? You've got a percentage of all this land, and this is all that you're using here for machinery or whatever it might be, right?
Yeah. So
isn't that going to lower your production or not change it at all? How does your stock value go up in something like that because you have more land?
So it's coming from from new accounting, the accounting of what are ecological services worth, what is clean water worth, what is clean air worth, what is converting carbon to oxygen by trees and photosynthesis, what is that worth?
That is scary.
Yes, and so it's really kind of creating a new way to value those natural processes, and making it so that investors can monetize that in a way that is beneficial to them.
But again, I mean, so you go, if we take this all the way through with ESG, and you look at your globalism, your social issues, your environmentalism, it's changing. It really is changing the system.
Oh, completely.
Right. It is. I I mean, you're getting down to the level of changing your accounting practices and what is of value. It has nothing to do with the asset. It has nothing to do with the production. It has nothing to do with the futures. It has nothing to do with these things. It has purely to do with what are the social policies that you're following, or at least that's heavily weighed.
Yes, and you know what is the value of clean air? You know, we've thought of that as sort of a positive externality. It's really trying to price externalities, natural externalities, and assigning a value to them and trading them in a way that incentivizes locking up resources so that they cannot be extracted for human use.
Yeah, it's a virus.
It's more like cancer, I think.
Yeah, exactly. Well, Marlo, really appreciate the updates on these things. This is a very important issue. We want to cover this a lot more here on the podcast. You're a great voice for this, of warning, so appreciate all that you're doing. Anything we can do to amplify your voice, we want to do this. So
thank you.
Appreciate it, and look forward to having you back again.
No, I appreciate it. And it's really important for people to understand this issue. We have until January 2nd when the SEC is, I think, making a decision on this rule, whether it's to implement the rule and allow the New York Stock Exchange to list NACs on the exchange, or to extend the comment period. It's really important that people step up and let their congressional delegation know that they do not want this. We've got to have our voices heard. It's interesting, you know, the SEC provided a 21-day comment period, very short, and going into the end of the year, so people are distracted by Christmas, and I think that's very much on purpose. And so I really appreciate you bringing light to this.
Great. All right, Marlo, appreciate it. We'll talk to you again soon.
All right. Thanks, Greg.
Thank you.